go live button. You're live.
Hello, everybody. Simon Dixon here, and welcome to another live broadcast, an AMA. Today, we're going to be talking a subject we've been meaning to talk about for quite some time, but we kept getting put off by emergency broadcasts, too much happening. Today, we're going to be talking about Tether and whether it's a scam. I get this tweet so frequently of people concerned and lots of FUD in the traditional finance space are saying that Bitcoin is manipulated by Tether. So we're going to be diving into the history of Tether, and I'm going to be answering that question by giving it from my perspective. I should give a couple of disclaimers just before we go live. The first one is I am a shareholder in Bitfinex, and Bitfinex team were the same team that created Tether. I'm also a shareholder in Circle, and Circle is the creators of USDC, the second largest stablecoin. So I'd just like to disclose that. And I'm also a shareholder in Coinbase that's about to IPO for in the secondary market, going for about $100 billion at the moment, who is also part of the USDC stablecoin. So just try and disclose that before we actually go live. But from a shareholder in Bitfinex that has seen Tether right from the early days, right in the beginning, I'd like to share a bit on the evolution so that we can answer that question. So just before we jump in, a couple of announcements. Firstly, if you're new to the channel, welcome, welcome, welcome. The first half, we're going to be covering content. The second half, we'll be covering your questions. To get your questions answered, head over to sli.do, that's Slido, sli.do, and put in the hashtag SD, Simon Dixon, SD3, 3 words or 3 characters, sorry, SD3. And once you're there, you should be able to ask your questions. And if you haven't got any questions, upvote other people's questions, and we'll take the top ones that come up. So that's the format, and we'll be covering on Tether and whether it's a scam or not. And also, if you haven't been following me on Twitter at Simon Dixon Twit, then I've been giving a daily update as part of my public commitment to health. And hopefully, I'm on my day 20 of my health regime, and I've committed to working out each and every day for the next 90 days. And I want you on Twitter to hold me accountable to make sure I check in. And if I don't check in, then you know I failed in my mission. But as a reward, I'm answering a daily question on my Twitter. So if you subscribe to me on YouTube, but you don't follow me on Twitter, a lot more content coming. And really, it requires a daily update with what's happening in the markets right now. Last week, we had a few internet issues because I'm in lockdown where I am. Then we weren't as smooth as we'd like to be, but hopefully all is good. We have boosted the dedicated satellite, and hopefully everything is working as planned. So let's get straight into the content. Welcome to everybody that's new. Please do like, please do share, please do subscribe. So the history of Tether. Tether was actually created as a separate project before it was called Tether. A gentleman by the name of Brock Pierce, who's a very large investor, he wanted to create a project whereby it would become easy for people to send funds between exchanges. One of the biggest problems were if you were using a crypto exchange and you wanted to implement something like an arbitrage strategy, and an arbitrage strategy is where there's a price differential between the same product on 2 different markets. So for example, Bitcoin might be trading at one price on Kraken, for example, and then another price on Coinbase and another price on Bitfinex. And arbitrage traders make money when there is a price differential between the exchanges, where they try and buy on one exchange and sell on another exchange and make a riskless profit if they can execute it fast enough. Now, when you were trying to transfer dollars between exchanges, you'd have to have a bunch of dollars on Kraken and a bunch of dollars on Coinbase and a bunch of dollars on Bitfinex. And it's very tricky getting the money in the banking system into these exchanges, and you could never do it fast enough. So there used to be a big differential in the prices. So Tether was a technical solution. It was originally built upon Bitcoin, and Bitcoin had a project in the very early days. One of the very early token sales was, in fact, the very first token sale was a project called Mastercoin. And Mastercoin was a project that allowed people to build tokens on top of Bitcoin. One of the contributors for the project was Vitalik, who later went on to create Ethereum. And the Tether token was created on top of Bitcoin using this Mastercoin protocol. It was later rebranded and renamed to Omni. It still exists today, but no one's really using it because Ethereum took most of the market for tokens. So the token sale happened, and it started to get the first use case, which is how could you solve this problem of how to get dollars from one exchange to the other? And the solution was, well, why don't we create a token? And that token promises only to create a token every time a dollar is deposited to a bank account. And this was the birth of what later became called Tether. And so for years and years, this was developed on the Omni protocol. And then eventually the project was sold to Bitfinex, and Bitfinex acquired the project and really set about trying to get all the exchanges to use and support Tether, which is abbreviated to USDT. For 2 years, nobody was interested. The first exchange that became interested in supporting the project and listing the project after Bitfinex was Kraken. And so finally, after a period of time, this market emerged. Now, it was only about $5 million that was held at the bank account, and there was only about $5 million of market cap for an incredible amount of time. And everyone thought that Tether was the most ridiculous project in the world. They were saying, why would you ever want to have a blockchain token currency that's backed by dollars? And everyone thought it was crazy. But eventually people started to realize the use case and the utility when Kraken listed it. And then you could arbitrage between Kraken and Bitfinex. Suddenly the market got a little bit, started to heat up a bit. At this time, Bitcoin was pretty much 99% of the crypto market. Any alternative just didn't have any kind of market cap or any kind of market share in the entire crypto market. Coin market cap consisted of about 10 to 20 coins, and nothing really fared or competed. So then what came next, after people realized that you could arbitrage, is to build robots, and they started to build algorithms, and the market started to emerge, and a bit of liquidity started to pick up. Next, the market moved more, and there were little crypto to crypto exchanges that started to emerge. Many of them turned out to be scams. There was companies like Cryptsy, which was one of the very early crypto to crypto exchange. They didn't have a bank account. And all they did is they served people that wanted to go from one crypto to another. It was a tiny niche. There was no market for really going from one crypto to another. But Bitfinex at the time, they leveraged their relationship that they had with their banking partner in Taiwan, and created this service whereby people could deposit dollars, receive a token denominated in dollars, which is the Tether stablecoin, and then people started to arbitrage. And gradually, more and more dollars came in, and it started to pick up. Then we had the Ethereum ICO. So Ethereum, Vitalik, was not really getting anywhere with having tokens on top of Bitcoin because it didn't have the functionality that Vitalik wanted in order to push forward the vision. And so Vitalik reached out to the Bitcoin community, released a white paper with the Ethereum Foundation, and said, here's our idea for a new blockchain that can serve this industry. And the Bitcoin community looked at the white paper and decided to fund it. And at the time, there was a token sale for approximately $15 million where a bunch of Bitcoiners put their Bitcoin in, and you received a promise to receive some Ether in the future, which was the protocol that made the Bitcoin blockchain. the Ethereum blockchain. And so that project emerged and started to, interestingly, it almost went bust because they spent the 15 million and Bitcoin was in the second or third bear market at this time. And the Ethereum project almost never got launched because they ran out of money. Fortunately, the market turned around, their Bitcoin became worth more, and the project actually started to grow. So Cryptsy, the company that I talked about, they decided to exit scam, and Big Van disappeared into China and stole everybody's money and just stole all deposits on the Cryptsy exchange. Everybody lost their money, just like we've seen constantly with some of the earlier exchanges. And other crypto-to-crypto exchanges started to emerge. There was a few more exit scams. I remember exchanges like MCX Now was the one that was that went into an exit scam as well. But the next one that came along were two. One was Bittrex and the other was Poloniex. Poloniex was later acquired by Circle, and later they sold that and they spun it off to a group of investors headed up by Justin Sun, the founder of the Tron blockchain. It's not, you don't hear too much about Poloniex, but it's really got a foundation of all the early Bitcoin crypto-to-crypto trades on it. Then suddenly, the crypto-to-crypto exchanges started to get a bit of volume. Token sales started to become all the rage. Ethereum got launched, and more people started launching tokens on top of Ethereum rather than Bitcoin. And all of a sudden, this stablecoin became really useful. So we went into what was known as the token sale. The token sale bubble was where every single mother and their son and their dog was launching a new token, raising tens of millions and sometimes billions for projects just simply based upon a white paper. And this really pumped the market like crazy. We entered into the bubble phase. Bitcoin pushed up to about $20,000. Ethereum pushed up from under $1 to about $1,400. We had some early investments on Bank to the Future where people got incredibly wealthy because through the Ethereum token and Bitcoin, when we were paying out thousands of dividends every day for those mining Bitcoin and mining Ethereum. Now, suddenly there was more and more money coming in because these exchanges realized that they could support Tether, these crypto-to-crypto exchanges, and then they didn't need a bank account. And so they could pair all of these different cryptocurrencies and tokens to Tether, as well as Bitcoin and as well as ETH, and they could have a dollar-denominated price, and they didn't need to deal with the hassle of trying to secure banking. Securing banking has been the biggest problem with many of the Bitcoin and crypto companies that we invested in the early days, way back in 2011, to a decade on. It's still a challenging thing, but it's getting slightly easier. So as millions and millions started to be deposited, Bitfinex sort of, through Tether, became the bank of all the crypto-to-crypto exchanges. So inadvertently, through this innovation, now it's one thing having $5 million a market cap at a bank, but when that starts to go up to 100 million and beyond, the bank suddenly starts to get lots of attention. And essentially the bank behind, the Taiwanese bank that was supporting Tether, they sit on top of, and this is where you get the interwovenness of how the traditional banking system works. You have a central bank, and then clearing banks have bank accounts with the central bank. And so big banks like Wells Fargo and Citibank, and in the UK, banks like Lloyds and Barclays, they all have accounts with the central bank. And they have to hold a certain amount of reserves, which, by the way, they don't hold as reserves. They tend to hold them as bonds and loophole them through a different topic anyway. But on top of then you've got all these other banks that sit on top of the clearing banks. And so this Taiwanese bank and many of the other banks sat on top of Wells Fargo. And Wells Fargo said, if you're supporting the Bitcoin and crypto industry and you are allowing people to deposit money to Tether, we're going to shut down that account. Now, at this time, the crypto to crypto exchange was growing bigger and bigger and bigger. And so suddenly Tether was sat on hundreds of millions in a bank account, and Wells Fargo was saying to the Taiwanese bank, we're going to stop clearing for your bank if you don't ditch these clients. And so Bitfinex had several different banking partners, but had to try and figure out, how do you move 100 million, 200 million, 300 million, 400 million, as the crypto to crypto exchanges were growing and growing and growing. They benefited off all the growth, and Tether was left with all the headache of trying to figure out what you do with all this money. Now, when the bank account gets shut down, you're trying to figure out, how do you move 400 million? And if you approach another bank and say, well, this is our compliance policy and all this stuff, most banks just get pretty scared, and then it's very, very tricky at that stage. And so really everything grew from there, and they had to find different banking solutions in order to support the growth of Tether. Now, right at the peak of this, a new ICO came along, which launched a token on top of Ethereum called Binance. And Binance went from, after launching their token, the price went up, they timed it right, they got out of China at the right time, and the exchange just started getting more and more people. And because they didn't need a bank account, they essentially outsourced their banking to Tether, and suddenly it went up to like 700 million rather, and then through 1 billion. And Binance's whole growth was because they didn't need to deal with the banking headaches that Tether was dealing with. And everybody started using crypto to crypto, and they realized that once you go into crypto, you can stay there without having to go out and without having to deal with a bank at all. And so Bitfinex were trying to find different banking partners, different banking solutions in order to service this Tether market. Then it started to go to $1 billion to $2 billion, and it just kept growing and growing and growing. And one of the challenges that they faced was that people were looking to do fast deposits and withdrawals now to Bitfinex. And as people were depositing dollars, it would lead to issuing more Tether so that they could then go in and out to all these different crypto to crypto exchanges. People could arbitrage. And then it hit the 2017 bear market, where the bubble started to crash. We had a ginormous correction, and everybody moved all of their Bitcoin and all their crypto into Tether to try and protect the huge returns that they made out of the up market and the bubble market. And so the market cap of Tether started increasing, as more and more people were utilizing Tether, and people used it not only for arbitrage, not only for moving between crypto to crypto exchanges, but also as a hedge against price crashes. And some countries, you would meet people in the crypto industry, and Tether really became the currency that they used during the bear market. Now, as more and more people were looking to withdraw dollars and get it into their bank account, the demand for dollars started really, really increasing as well. And so Bitfinex Tether found stable banking for their long-term reserves, but trying to meet people's demands, where people were trying to get money out and in their bank within a day or two, meant that they found a partner called Crypto Capital. And Crypto Capital was a merchant processor. It was a payment service provider. And really, it was one of the only options of being able to get money in and out in a fast way. Then Crypto Capital turned out to be a fraudulent shadow bank that was operating all sorts of crazy things, and they got arrested. The founder got arrested by the FBI, and suddenly $850 million of Crypto Capital's funds was seized by governments, because Crypto Capital was engaging in all sorts of activities that looked like money laundering and all sorts of things. So through no fault of their own, Tether had a hole of $850 million that they needed to figure out what to do with. And Bitfinex had this as well. And sorry if I'm butchering a bit of the details to try and make the story a little bit easier. We end up in this scenario. And so an account called Bitfinex started to create all theories around the entire Bitcoin bull market being a function of Tether, and that they were printing money in order to buy Bitcoin, and they created the whole Bitcoin bull market. And more people started to question Tether and whether they could, whether it was backed by dollars or not. And so suddenly this $850 million through the shadow banking system, through crypto capital, got seized by governments, and then it was no longer fully backed. So they Tether essentially entered into a loan agreement with Bitfinex, and this is the public case. I'm not telling you any of this, the case information. It's all public information. And then the New York Attorney General started to investigate this. Bitfinex and Tether cooperated, gave lots of different documents, and now more recently, the case has been settled, the loan has been repaid, and the bank which backs Tether issued a statement that all of the money that backs Tether is in a client account. The New York Attorney General didn't sue them for fraud. They pretty much said that the money is there, but they were complaining about not being transparent about this loan agreement, which they used as a solution for the fact that government seized a bunch of the money due to the bank or crypto capital or whatever you want to call it having that. And so now there's this huge hangover where people throw all sorts of allegations at Tether. They call it a scam. They say that it's all these different stuff. And it's become something that now has almost, I'll look at the market cap now, about $32 billion of market cap last time I looked. And people are still using it, and competitors have come along like USDC and decentralized versions like DAI, where they have a stable coin. You can get dollar value, and it's algorithmically back to the dollar rather than needing that banking partnership. So you can over collateralize, for example. You can lock up, if you want $100 in DAI, which is the algorithmic stable coin, you can deposit $150 worth of ETH, and then you will get $100 worth of DAI. It's collateralized, and then you can convert it back. So the decentralized models have emerged now. Then you have companies that took the concept and were set up in a more audited way, but Tether still is here and is the most commonly used and the most liquid at the moment. And so my answer to that question, by giving you the background, having met the Tether team, been to shareholder meetings, I'm not giving you things that I can't share here, but I've seen the story, and I know the bank, and from what I can see, there is no real way of auditing it fully, so I can never be 100% certain. But from what I've seen is a extremely innovative product that was used, and really Bitfinex invented the crypto lending market that we know about today using Tether as well. And it emerged into this story of where it is today. And so my perspective is not a scam. I will never fully know, because there's no way of fully auditing a bank, but the bank's come out and said that it is backed. The New York Attorney General settled with them over the loan, but if it was fraud and the money wasn't there, I'm pretty certain that the New York Attorney General would have exposed that for what they thought it was, saying that it's not backed. Really, the story will continue, and Tether will be continually used as a way that people don't really know the history. Over the years, I've given several talks went on the news and gave different perspectives that you can see on my YouTube channel from that. So from my perspective, Tether is not a scam. It's been an innovative product, and it's serviced the crypto markets. Time will tell, and we'll end that subject there. So now we move to the second half. I'm going to take a quick water break. While I take that water break, do me a favor, take this opportunity. If you enjoyed this content and you'd like to see more just like this, hit the subscribe button. If you're not a subscriber already, hit that bell symbol and hit all, because YouTube needs to send us more traffic, because we believe more and more people need to know about the crypto industry. And my next broadcast, we're going to be doing some more content on the economy to make sure people are prepared for what's coming next. So while I take a quick water break, after 3, do me a favor, hit that like button so that the YouTube algorithms can send us a bit more love. So 1, 2, 3, hit the like button now. We'll take a quick water break, and Azad's going to pull up the questions on Slido. Okay, so if you'd like to ask a question in this segment, you can scan that QR code that you see in front of you on the screen share right now. Or you can just head over to sli.do and in the box enter ST3. We'll be covering the most upvoted questions. You can read other people's questions and upvote them, and we'll go through as many as we can in the next 33 minutes. So Azad, what do you got for us?
Yeah, let's start with the first question, which is from Anonymous. US national debt is $26.70. 26.70 trillion. Does it matter? What are the long-term consequences, please?
Yeah, I think the US wish that their debt was $26, but it's $26 trillion. And the answer is yes, it matters. 26. This is the movement from free market capitalism to socialism, to close to everything being taxed and a removal of private rights and human rights. That's what it is. It's debt slavery by using the US debt markets and government debt in order to prop up the system. And so just this year alone, I think they took on about $8 trillion of debt. They took in about $3 trillion of tax. And so they've added $6 trillion to that. If you want to know how big $1 trillion are, I challenge you to head over to a video that I recorded years ago when I was forecasting what the debt would look like in the future based upon this world's regulated debt-based Ponzi scheme called the US dollar backed by debt. In TEDx talk, if you type in Simon Dixon TEDx, I've given 2 TEDx talks. One of them was at Holt University. You'll see a bit of a white background. And there I talked about the big problem with debt. And it's a TEDx talk that I gave. Check it out. And it gives you a really good example of how big $1 trillion actually is so that you can conceptualize it. It's a very, very big number. The long-term consequences of this is that because the US dollar is a debt-based Ponzi scheme, the world's largest regulated Ponzi scheme, where the government have outsourced the ability to create money to the private banking sector through banks issuing a digital currency called the dollar, which is when you log into your online banking, it is a digital dollar. It was created by a bank and is backed by debt. And when consumers don't take on debt, or consumers repay their debt, or consumers default on their mortgages or their debt, money disappears from the economy and it causes a recession that can lead to a depression. So they need to substitute that with another form of debt. So they look to companies and they do things like quantitative easing, and they look to government debt so that they can create more money as debt, and they can stimulate the market and remove the market away from free markets. And so this is why we're at $27 trillion, because the money to repay the debt doesn't exist. So we can stop pretending that we need to pay the debt. I talked about this in my book over a decade ago, Bank to the Future, Protect Your Future Before Governments Go Bust, that this is the movement. The phrase modern monetary theory didn't exist at the time, but I was explaining that fiat currency's destiny is that governments have to, or central banks have to take back the ability to create money because they've created it as a debt-based Ponzi scheme. And so the consequences of that are that you will get in the future central bank digital currencies, or even government digital currencies, and you have algorithmic dollars that combine government policies with money creation, just similar to what you're seeing right now, but in the way it's been done through quantitative easing, where that's helping a fiscal stimulus, and then the government stimulating and spending money and sending checks. But you end up with higher and higher tax until eventually you get that. You get the removal of market pricing, where the Federal Reserve takes the other side of all of the trades, and you move more and more to a larger and larger and larger government. That's the consequences. And eventually the removal of many of your human rights, privacy, and all the other agendas that will come with these central bank digital currencies. Next question.
The next question is, 1 second. What would you do to protect both your personal and financial freedom if your country was sliding towards socialism, communism, in the EU, excluding in the EU?
Yeah, so what I did is I moved to a country where I wanted what I valued most, which was freedom. And so when things weren't, going my way, I relocated initially to Hong Kong, had a very high level of economic freedom. I know it's been going through some challenges at the moment, and then I moved to an island where I get a very much a community spirit, where even when you're paying tax, it feels like a contribution to society. So I know that that's not an option for all people. Most people don't want to change their country. But if it's an option for you and you're at that age, you're at that stage in your life, then the only option to change from a country where you have very low economic freedom is move to a country that gives you more economic freedom. As a general rule, I have found that the smaller the country is, the easier it is to manage, and the less influential governments are, and the more influence you can have on that. It's very easy to manage a small community, so that's the right type of place that I like to be involved with. And when you start going up to the India level or the China level, then it's impossible to manage that many people without having to have lots and lots of control. So the answer to that question is, if you don't like where you live and where it's headed, the only option is you either have to learn to live with it or relocate.
If you had to pick a country to build crypto wealth, which one would you prefer and why?
Well, if the only consideration in relocation was, where you were building your wealth, then you'd obviously pick a tax haven. And you pick a country that won't tax you. You'd investigate whether you have any exit taxes when leaving your country. And then you'd look to live in a country whereby, for people in, for example, the United States, the only option is relinquishing citizenship, which would be very expensive, or moving through Act 60 to somewhere like Puerto Rico. Or if you live in another country where you don't have exit taxes, so countries like Canada have exit taxes, or a country which just lets you leave. For example, we were able to leave the UK. You just have to meet the rules of that and not return within a certain period of time and meet all the criteria to no longer be a resident there. Then if it was the only consideration, then you go to a tax haven and a country that is supporting the Bitcoin community, and most small islands out there see the opportunity in supporting Bitcoin and crypto. The Isle of Man was the first country in the world the first government in the world to support Bitcoin, but they got a phone call from the Bank of England stating that if you support this industry, then we will remove clearing to your island. And so you get larger forces at work there. But it's not just the consideration. The consideration is also lifestyle, where you want to live, your family, your children, whatever it may be. So it's a lifestyle decision. But there's many great jurisdictions, and it depends if you're just considering tax or whether you're considering just freedom. Many people are relocating to places like Dubai in the crypto space at the moment, and many of the islands have set themselves up to give people more freedom to grow crypto wealth. And then there's the tax consideration as well. So I did actually do one of my Twitter videos. If you head over to my Twitter, I've got these 19 videos that I've been giving every day with a very small question where I answer one each day. And I think it was day 16, 17, 18, something like that. I answered this very question on relocation and some of the different jurisdictions you might want to consider. Next question.
What will happen if Bitcoin succeeds and is globally adopted as reserve currency, but is hoarded or manipulated by a small percentage of the population, i.e. The elites and banks?
Well, I think you answered your own question. So if Bitcoin enters onto the balance sheets, so the definition of a world reserve currency is that central banks hold it as a reserve asset. At the moment, they mainly hold treasuries, their local currency, dollars, gold, and government debt instruments and various other things as on their balance sheet. I believe that central banks and some central banks are certainly holding Bitcoin. They haven't said it yet, but I believe that it's a necessary protection for countries. When I was advising various different jurisdictions on their Bitcoin strategy way back in 2013, 2014, I was telling them to allocate a percentage of their country's electricity to mining Bitcoin, build a position, and then once you've got a significant position, announce that your central bank is holding it as part of its reserve assets. One country that did that was Bulgaria. They did it slightly differently. They instead confiscated a lot of Bitcoin from a criminal organization, and they ended up with Bitcoin that was worth more than their entire country's national debt. And then the criminal organizations called the government stole the Bitcoin and they just disappeared, and they still ended up with the national debt. So that's one of the challenges with Bitcoin, is that it's in an organization is pretty tricky to manage. But if all the central banks own all the Bitcoin, and then they decide that they want to manipulate the price, so that does happen. Short term, at the moment, the wealthiest people in Bitcoin manipulate the price all the time. Certain mining organizations, exchanges, wealthy whales, they mine it all the time. They manipulate it all the time short term to try and get you to sell your Bitcoin so they can crash it and then accumulate and scoop up some of those Bitcoin. Long term, the fundamentals prevail. Because this is the hardest form of money, digital money with the hardest fixed supply that's on the process of getting global adoption, whereby even if every millionaire in the world wanted to own a Bitcoin, there's not enough Bitcoin to own it all. Then it becomes, with that scarcity, pretty, a bit harder to manipulate, but not unfeasible. So markets will always be manipulated. Bitcoin is no different than other markets. But I think where it's going is through the scarcity is more and more people are going to be using it as collateral in order to gain access to other financial products, which we're already seeing at the moment, where, the growth in the lending market, where rather than selling their Bitcoin, people are holding their Bitcoin, they're collateralizing it up, and they're getting stablecoin loans, which brings us back to the stablecoin topic, because they don't want to sell. So I don't see that scenario happening. Bitcoin is pretty distributed. Now there are, if you look at like the Bitcoin wealth like wallets, you can see most of those, although it looks like a few, like 2,000 very wealthy people, some of those are exchanges or mining pools, and they're consolidating lots of different people. So it's pretty distributed. They'd have to find everyone to sell their Bitcoin. Then they'd have to accumulate so much of it, and it's been very hard to accumulate it without pushing up the price like crazy. But short-term manipulation happens, long-term fundamentals prevail. Next question.
As Bitcoin tops at the end of the bull market, what happens to those altcoins that have fantastic fundamentals? Will they also go into a bear market or continue to grow?
So historically, you can't give financial or investment advice, but historically, the crypto market has been very correlated to Bitcoin. When Bitcoin pumps, alternatives that have got good communities, they pump harder. When Bitcoin crashes, they crash harder. So if we enter into a Bitcoin bear market, you'd expect the alternatives to crash harder as people flee over to stablecoins and Bitcoin. They move over to Bitcoin because they feel more confidence in its long-term value, or they move over to stablecoins to try and preserve so that they can buy back at a cheaper rate when they think the market is turning around. But remember, all this trading activity creates taxable events, and make sure that you plan how you're going to do your tax affairs before you start trading. That's a very important factor. But yeah, traditionally, in bear markets, alts dump harder, and in bull markets, they pump harder.
If the government is moving to tax its citizens, how will investing in Bitcoin help? Eventually, won't this too be taxed to death?
Bitcoin already is taxed to death. So most countries have defined their tax treatment, and many countries consider it a property. Some countries consider it a currency. So you do need to check if you are investing in this industry, it is not tax exempt. You do need to declare those on your tax returns by most countries' laws. So they're not taxing it to death. They're just treating it like they do other asset classes and requiring people to declare it. And this is why you need to really think about your tax affairs before trading, before entering into DeFi, before that. And so making sure that you get that set up. We work with our clients to make sure that they get good structuring so that they're set up where they can legally pay the right taxes and optimize their personal situations as well. But there, I don't see introduction of taxes into Bitcoin. I see enforcement of what they have already enforced, because it already is a taxable event when you go into and out of Bitcoin and crypto in most jurisdictions. And the reason I don't think they're going to ban it is because they're going to subpoena lots of the exchanges, get the data of those that haven't paid their tax, and then send letters out like we've already seen with the IRS in the US through Coinbase, and ask people to declare it on their next tax return. The government needs money. The next $1 trillion market going up to 10 trillion and beyond, wherever it goes, is a really good way of collecting a load of tax. And you don't need to change anything. They just can treat it how they do other asset classes and use without having to make many changes.
I think now's that time to plug in your book, and we're getting a few questions on Twitter. People wanting to know when's the next round of you taking on another group of people for Retirement Plan B.
Okay, so yeah, those that haven't watched my 4 3-part video series, head over to retirementplanb.com. And that's where I'm describing exactly how I'm investing my money in the current markets, preparing for the Great Depression of the 2020s. Over a decade ago, I wrote a book that was the first published book in the world to include Bitcoin, and it went through all of the different technologies that lead us to the Great Depression of the 2020s. And that was called Bank to the Future, Protect Your Future Before Governments Go Bust. I'm now giving that away for free as a digital copy. If you'd like to claim your free digital copy, head over to retirementplanb.com/book. And then you can get a membership site where you can get the free video series, and you can also get a free digital copy of the book. For anyone that wants to work with us to actually build their retirement plan B, we took on 500 clients and we had to stop because we can't service anymore. And we're working with them to build their crypto and Bitcoin retirement plans and protect and all the things that we talked about in the free 4-part video series. And once they've started building their retirement plans, we're working with them for a few more weeks, then we can start to consider the next round of people. If you would like to be considered, then after the 4th video, there's a link to a form. It explains more about how the program works, and you can register your interest. We are not taking on clients at the moment, but register yourself there. And the second that we go live and we're ready for more clients, we will email you, but we don't have an exact date yet. We're just focused on really servicing those 500 people that joined the retirement plan B in the first round. But we will make sure, if you're on that list, to notify you before anyone else, and anyone that's on that list, to make sure that you are notified as soon as we're ready to take on more clients.
What's your thoughts about Chia versus Bitcoin?
So I think of the answer to this question would be the same. You can change Chia to every other blockchain and all these other things. You put them in one category, and it's people that think that they could do Bitcoin cheaper, faster, better governance, more privacy, more efficiency in terms of economically friendly, and one by one, they never achieve it. Chia would be one of those ones that is looking at taking the economic, environmentally friendly version of Bitcoin. And I call when I put these into categories of these so-called Bitcoin killers, they all try and kill Bitcoin. They all say that they can do something better. They gain speculative value where people are willing to speculate on it. But I'm looking for something to gain utility value. So far in the 10,000 different cryptocurrencies, some of them have gained utility value by being connected with some kind of platform, which would be a utility token, or the only two blockchains that have gained utility value is Bitcoin as hard money and Ethereum as a protocol for DeFi, NFTs, tokens, and various other things. And a bunch of people that say that they can do all of that cheaper, faster, better. Remember, Ethereum said that they could do Bitcoin and money cheaper, faster, better. And now their transaction fees are similar to what they were complaining about in the first place. So to me, it would be put in speculative value, zero utility value, and you might speculate on whether it can succeed, but most people will speculate and then end up in Bitcoin as the world's best shot at ever achieving digital hard sound money. Next question.
Is Monero a good idea to include in long-term portfolio? If not, do you think any privacy coins belong in a portfolio?
I can't give you investment advice, but the reason that I don't hold Monero in my personal portfolio is because I believe that privacy coins should be and will be 100% utility in the future. So they have full utility, but my belief is that during the next regulatory crackdown, every exchange will have to delist privacy related coins. And in fact, that's already starting to happen. As more and more regulations come through, and we have things like bank secrecy acts and financial action task forces, and more aggressive money laundering requirement, travel rules, and all sorts of stuff that is coming through and getting more and more aggressive on crypto financial institutions. I believe we'll reach a phase where they can't make a market in coins like Monero. And so I only see it being more and more delisted. But if you're using it as a privacy coin, not for an exchange or a speculation or an investment, then feel free to use it for that. But in terms of thinking of it as purely an investment, I see the risks as too high of not having a price. And if it doesn't have an exchange and a price in the future, then it may not be something you want to consider in your portfolio. But, you know, it doesn't mean that that's going to happen. There's the crypto market is full of surprises, but that would be my educated guess about why I don't hold it in my portfolio personally as an investment vehicle.
What asset classes do you consider being the best to build, not protect, wealth today? Would you still buy gold and silver if you have to start from scratch?
Gold, I would not buy to build my wealth. I'd use it to protect my wealth. In terms of the risk-adjusted return, I still believe that Bitcoin is the lowest amount of risk with the highest amount of return in a very speculative environment out of all asset classes. But no matter whether I'm investing $10, $1,000, $1 million, $10 million, $100 million, whether I'm starting from scratch today, I would still follow the exact approach I shared in that 4-part video series in video 3 and the 5 different investment strategies that I'd be using. And I am using those today, and I'm building from scratch with using that. And it really doesn't matter whether it's a small amount of money or a larger amount of money. That's exactly how I'm building my wealth in the Great Depression of the 2020s. But yeah, if you're looking to invest in gold to become wealthy, you may preserve your money, but from my perspective, it's not an investment to increase your wealth. It's a wealth preserver.
Hi, Simon. Which stable coins are the safest to sell into and keep for the next bear market? At which time to buy in again?
Okay, so safety is depending on what type of risks. So Tether has the most amount of liquidity, but it has the least amount of auditability from all of the different stable coins. USDC has less liquidity and less utility, but it has a higher level of auditability and fits within a more regulated environment. Now, sometimes that's good, sometimes that's bad. When it's good is if you're looking for all of the safeguards and protections to ensure that it's audited, but at the same time, that comes at a cost because regulations does come at a cost. And so you might get all sorts of challenges when you're converting that making sure you have to have all these high levels of documentation and meet the US standards, and then your data will be given to the US and you have to fill out W8 Ben forms and all sorts of stuff. Then you have decentralized, which is no bank risk, but you have smart contract risk. And you have the risk of being liquidated in market corrections. PAX actually has a really interesting structure whereby it diversifies its balances across trust structures that only hold the amount relative to FDIC insurance. Now, you'll know that FDIC insurance, if you've watched any of my videos, doesn't cover many of the banks, but they've got an interesting structure there. So they've all got relative different types of things. The one that I'm using for my retirement plan, because of my particular need, which is looking for the ability to lend it under a regulated environment. So I use a combination of USDT and USDC, and I use them for different use cases. But overall, diversify.
What asset classes do you consider being the, sorry, we answered that question, isn't it? Came back 1 second. Why do you keep, if you bought Bitcoin today in country A, then in 5 years immigrated to country B, and then sold your Bitcoin, what would be your obligation to country A?
The answer is it depends on what country A is. So if country A is Canada, you'd have to take the value that you purchased it. Can't give you tax advice. You'd have to see local tax advice in Canada. Then you'd take the day that you relocated and the value of that Bitcoin. And even if you didn't sell it, you'd have to pay an exit tax on that. But the rest outside of that country is attributed to that other country. In the case of the US, you would most likely, depending on how you're holding it, if you're holding it as an individual in the retirement plan, if you're holding it in a corporation or an entity, it would be subject to different taxes. But in the US, they'd make you pay taxes forever, unless you're looking at some of the different options like Puerto Rico. But then they may attribute the wealth that was generated prior to leaving to the US. If you're in a country like UK, they don't have an exit tax right now, and you just need to meet the criteria and not return to that country. And there won't be any tax consequences, but I can't give you tax advice. Things change, laws change. I'm not a tax advisor. You're going to have to get local support. So the answer to that is depend on country A and get tax advice in country A. But there is a way of achieving that from country A to country B, but it depends on the country you're in.
Gensler says SEC must root out crypto fraud. What projects do you think he will target? Is Tether safe? Critics say Tether is a way for the Chinese to counterfeit dollars.
I think we covered Tether enough, but the Chinese to counterfeit dollars. Well, firstly, it's global. Tether has got some level of adoption. And this is really a political question. So everybody, it will be counterfeiting dollars. Facebook tried to counterfeit dollars. I think that foreign central banks will try to do that as well. And I think you will get, but counterfeit is also not quite an accurate way of representing it, because the dollars is creating a derivative of a dollar. Another stablecoin is being created if it's backed by dollars. So counterfeit is not quite the right way of explaining it, because with a counterfeit, they create new supply rather than taking out supply and replacing it with a digital token. But yeah, that's what I think we've covered Tether quite a lot in the first half.
Do you think M2 this time will distort the typical bull bear market cycle we've experienced till now in Bitcoin?
So I covered this on one of my daily tweets, not quite this, but what is the correlation between the different markets? And so, M2, central bank, quantitative easing is distorting the stock markets. And the stock market is a function of two things: consumer debt and quantitative easing. The Bitcoin is correlated to three different things: the demand for people to own their own money, the demand for people to spend their own money, and the fact that it's got its fixed supply, and the demand for people to counter money printing. On top of that, there's a bunch of speculative value, but the fundamental value prevails in its own time. And so increases in M2 means that money is being created, which I think accelerates the demand for fixed money supply. And therefore, I do think that increases in the money supply certainly increase the demand for Bitcoin long-term in the fundamentals.
Okay, is my money safer in USDC as opposed to the bank?
So there's different types of risks. So firstly, any money held at a bank is rehypothecated. It's not insured. It may be insured if your one bank goes bust or two banks go bust. But if we have a 2008 systemic risk event, it's at the risk of bail-ins, where the bank just take it back, or you're relying upon the government to do bailouts, which means you pay for it through tax and or the central bank protects it, in which case you're paying through it through increases of inflation when those forces actually come through. Now, money in a stable coin has, firstly, the risk that there's a counterparty on top. So it is still held at a bank. So the bank can still be bailed in behind the stable coin. So you still have all the same bank risks. There's different types of innovation if it's backed by trust structures, whereby the money is not rehypothecated. So there's interesting developments there. And also on top of that, if you're using a decentralized contract, you're just replacing those risks with smart contract risks. So there's no such thing as a riskless environment. And so your money is never safe, otherwise it wouldn't yield. It's always subject to different risks, and you should be in the risk management business of preparing for different events if you are looking at building your portfolio and protecting your wealth.
I guess it's that time now.
So Azad, we've got time for one more, because I think we started on time and we're on the hour.
Great. Does Bank to the Future require Bitcoin to be successful? If not, does it still require some form of crypto or DeFi to be successful?
So Bank to the Future is the company that I co-founded, and we allow people to invest in fintech, Bitcoin, and crypto companies. Our whole platform is giving people the ability to buy stocks and shares in companies like Kraken and Bitfinex and Circle, and earlier startups like Celsius and various other companies. We made a bet a long time ago that we believe the future of finance looks very different from the past. And therefore, we wanted to give people the ability to invest in these companies. If Bitcoin fails or the crypto industry disappears, then certainly our investment philosophy and thesis would have failed as well. But I'm sufficiently diversified. Bank to the Future is sufficiently diversified. And we can pivot into general financial technology. So if Bitcoin doesn't exist, which is a scenario that I just can't see, then it would be other crypto. And if other crypto doesn't exist and everything becomes legal, then it's fintech. We just it's a simple philosophy. We believe that we are seeing the disruption of a multi-trillion-dollar financial markets, one product at a time, and we allow people to invest in different companies that are creating lots of different innovation and disrupting every single financial product one at a time. That's the thesis and the philosophy. And if you're investing in Bitcoin and crypto companies, you're looking to diversify. And so when you're investing in a company like Kraken, they do very well when Bitcoin crashes as well as when Bitcoin goes up. The market where they perform the least is when we're in sideways markets, but it's that type of way. So thank you very much. I think that was really, really interesting set of questions. I hope you got your answer as to whether Tether is a scam, and from my perspective, gave you some of the history so that you can do your own research and make your own analysis. But one thing is for certain, stable coins have become an incredibly interesting innovation. And from that whole story has actually become the financial product that is likely to reshape the entire financial system as central banks launch, companies like Facebook launch, and they're all using that tiny little concept that was created by us, for us, in the crypto industry. And stablecoin is certainly part of that evolution. And we look forward to seeing where it goes next. So always remember, just before I give the outro, hit that like button if you enjoyed this. Do me a favor, retweet it, share it. If you haven't subscribed already, I give content like this each and every week. I'll answer your question and I'll pick a new topic, and I'll make sure that you're up to date with all the financial changes that are happening in traditional financial economics and the Bitcoin space. But always remember, you are alive at one of the most interesting times in financial history. Many people are going to get hurt. Many people are going to do really well. And I want you to stay on the right side of that change. So if you don't follow me on Twitter yet, I'll see you tomorrow, where I check in each and every day and give you a daily update at Simon Dixon Twit. Thanks, Azad, for picking out the questions. Thanks to the audience. And I look forward to seeing you this time next week. Let us know what topic you'd like to see. Peace.